In this video, we cover some of the special provisions for depreciation. Since almost all of them deal with accelerating the deduction, this is a good section to know. The basic maker's depreciation we covered in the previous video serves as the baseline for cost recovery, but there are special provisions in the tax law that can lead to quicker depreciation. These provisions have been temporary, only to be extended again and again. The provisions we're going to look at include Section 179, immediate expensing, bonus depreciation, and something a bit less favorable, the auto depreciation limits. This should look familiar. This is Daniel in Toshland, whose job it was to show us that deducting the cost of something is generally better than capitalizing it. If this is true, then immediately deducting lowers the after-tax cost of purchasing the property, and in theory provides incentives for businesses to buy more, thus stimulating the economy. This stimulus is the origin of Section 179, which permits the immediate expensing of certain amounts of qualifying property placed in service during the year. The 2017 limit was $510,000. The 2018 limit is now $1 million. Thus, if Hobie Corp places furniture in service for $750,000 in 2018, that entire amount can be deducted under Section 179. Now, there'll be no future depreciation on the furniture since the entire cost was already deducted, and the adjusted basis is now zero. Section 179 is directed as a tax expenditure for small businesses. So, how does Section 179 limit its benefits to only small businesses? Well, a small business is going to be measured by the amount of qualifying Section 179 property placed in service. The 2017 threshold was $2,030,000. The 2018 threshold is $2.5 million. The amount is adjusted each year for inflation. To the extent the amount of qualified Section 179 property exceeds $2.5 million or $2.03 million in 2017, the Section 179 immediate expensing benefit doesn't evaporate. Instead, it is phased out dollar for dollar for the amount over the threshold. So if Hobie Corp places in service $2,650,000 of qualifying property in 2018, that amount exceeds the threshold by $150,000. Thus, Hobie may expense only $850,000 in 2018. You can see that Section 179 is a special benefit that lowers the after-tax cost of new qualifying property. But as a special benefit, it comes at the grace of the legislature. In order to curtail its abuse, Section 179 is not permitted to create a tax loss. Thus, a business will need to measure its income, including all deductions except 179, and that amount is the limit of the deduction. So if we revisit Hobie Corp. And the $2.65 million of qualifying Section 179 property, and an eligible Section 179 amount of $850,000, except Hobie has taxable income before Section 179 of only $470,000. Then Hobie Corp's deduction is limited to $470,000. The excess eligible amount, if elected by Hobie, is carried forward. A couple of important notes on Section 179. It is elective and at the behest of the taxpayer each year. Section 179 can be elected for one asset, multiple assets, parts of an asset, or none at all. The annual limit is adjusted each year for inflation. So what qualifies as Section 179 property? Tangible personal property, computer software, and certain non-residential real property improvements. Section 179 property can be new or used and still qualify. Well, Section 179 used to be a very big deal for taxpayers, but times have changed. Over the past decade or so, a new way to expense property that would normally have been capitalized has been reintroduced. It was also around in the early 2000s, and it's called bonus depreciation. Bonus depreciation is automatic. That is, a taxpayer must elect out of bonus depreciation. Bonus depreciation is a super accelerated form of depreciation and is based on a percentage of the basis when the property is placed in service. You can see under the old tax law, it was 50% and slowly decreasing down to 0%. But that was the old world. The new law increases bonus depreciation to 100% starting September 28th of 2017, and it stays at 100% through the end of 2022. Then it starts its decline phase. This means that similar to Section 179, 100% of the basis can be deducted in the first year of depreciation. Any property with a recovery period of less than 20 years qualifies, and computer software also qualifies. Under the new rules, used property also qualifies. Thus, if Hobie Corp places the $2.65 million of furniture in service in 2018, using bonus depreciation, all $2.65 million is deducted. There is no phase out, and there is no income limit on bonus depreciation. Not all the depreciation news is so awesome. There are limits on depreciation for certain types of properties that frequently get abused by taxpayers. The type of things that are used for personal use but treated as business use, and one of those items is automobiles. In order to decrease the depreciation benefit, auto depreciation is generally limited to a dollar amount each year based on tables provided by the IRS. For example, for cars placed in service in 2017 and 2018, the depreciation limit for the first year is $11,160, and that includes bonus depreciation. If bonus is elected out, the limit is only $3,160 for the first year. Second and third year depreciation are likewise limited to amounts as well. These tables are updated each year for inflation as needed. If a taxpayer placed in service an auto in 2018 at a cost of $40,000, typically under bonus depreciation, the entire cost could be written off. Instead, bonus is limited to $11,160. The remaining basis of $28,840 will be depreciated starting in year 2 as normal, but still subject to the limits. So for this auto, typical depreciation in year 2 would be $28,000 times $840 times the second year depreciation factor for 5-year property, or 32%. That would yield $9,229. However, the limit per the table is $5,100. This table shows how a typical 5-year recovery period auto turns into a 15-year recovery period under the auto depreciation limits. Lastly, I want to discuss what happens when property is not used 100% for business. Let's start with an example. Yoda has a new $60,000 car that he uses 80% for business. When property is used part for business and part personal, I like to think of it as being two properties that are bifurcated from one. In this case, a $48,000 car that is depreciable, and a $12,000 car for personal use that's not depreciable. Now, we can treat the $48,000 like any other business asset. Bonus depreciation of 100% would be allowed, except that it's a car, and it's subject to the limit of $11,160. However, that limit assumes 100% business use. The limit also must be bifurcated by taking 80%. Thus, the real limit is only $8,928. Although this example uses an auto, the business use proportion would apply to any type of property. Of course, most other properties don't have limits to consider like autos. Well, that brings us to the end of video T7D on the special forms of depreciation. You can hopefully sense the tax advantages offered to businesses through the new tax law. Expanded Section 179, 100% bonus depreciation, Recall that the 100% bonus depreciation starts to fade in about 5 years. I guess we'll have to see whether or not Congress and the president in place in 5 years from now are still keen on this system. If not, you'll all be back to maker's depreciation from the previous video. I guess we'll all have to wait and see. Thanks for watching.